The latest Atlanta Fed GDP nowcast mathematical model projects Q1 US GDP is going to be minus 2.8%. Some of it is due to increased imports of the US companies as the companies are trying to stockpile goods before tariff take effect on April 2nd. So net export is used to calculate the country's GDP. Net export equals total export minus total imports. Because of the large amount of imports we're seeing, it's causing the net export to be very negative. Goldman Sachs now believes that Federal Reserve and European Central Bank will cut interest rate 3 times this year because of Trump's tariff action. This expectation is actually in line with CME FedWatch tool, which is the probability of Federal Reserve cutting rates or increase rates derived from the futures market. Goldman Sachs now forecast very little GDP growth for the rest of 2025 for US, with non-annualized growth of 0.1%, 0%, and 0.2% in Q2, Q3, and Q4, respectively. So this is telling us they believe low GDP growth is not a temporary thing. So these numbers are very close to zero. It's kind of dangerous because having 2 consecutive negative GDP is viewed as recession. So I think Federal Reserve may be facing a very limited policy space due to the current tariff policies, because the low GDP means the country is experiencing low growth. The tariff policy risks pushing the US into actually stagflation. It's a combination of high prices and low economic growth. Tariff acts as a tax on imported goods, increasing the price for consumers. This leads to higher inflation. In a normal scenario, when we have high inflation and strong growth, Federal Reserve can tighten monetary policy by raising interest rate and reduce liquidity by doing QT. During low growth plus low inflation period, Federal Reserve can implement easing monetary policy by cutting rates and use QE. But in stagflation, we'll have high price and stagnated growth. Federal Reserve will be stuck because tightening monetary policy will worsen growth, but growth is low. Easing monetary policy will worsen inflation, and inflation is high. So some people argue that tariff may have a deflationary effect by reducing demand, but if you look at what happened during the COVID-induced inflationary period, those effects were minimal. So as a result, Jerome Powell is in a tight spot with very limited monetary policy room, increasing the economic risks.